On the show, India Mart Intermesh, they put up a strong showing actually in the past quarter. There was a good growth on various parameters. But what's the way ahead? We're joined by Mr. Dinesh Agarwal, the CEO of India Mart. Hi, Mr. Agarwal. Good morning. Good to see you in. I want a couple of numbers out first out of the way. Paid subscriber growth is still very tepid. On a quarter-to-quarter basis, how do you see this number picking up? If you could give us a guidance on that front. And also collections, well, they perked up. What's the steady state growth we should work with on collections, paid subscriber and collection? Go ahead.
See, on the paid subscriber, we have been saying that our silver customer churn has been elevated, and we continue to work on various items that are affecting our sellers. We are going and meeting the sellers continuously. We have made a lot of changes so far. Hopefully, in the times to come, in couple of quarters, there should be some uptick visible. On the collection side, we have improved the collection over the last 2-3 quarters, collection growth, and we would try and target towards a double-digit collection growth because given the customer churn is still stubborn, I don't think we can give any concrete guidance on either of the two.
So if you could give us a broad range as well. You said paying subscribers should increase. If I look at the last few quarters, it's been between 2.1 to 2.2, somewhere closer to 2.15 on an average. How much better do you expect this number to be? We're not asking you for specific numbers, but just an indicative range. And even collections in the first quarter grew by 17.5%. You expect the double-digit growth to continue, but there is a big difference between double-digit and late teens, right?
So let's look at the standalone collections first. The standalone collections grew at 5% and then 8% and then 9% and then 10%. And the standalone operations account for the large part of our collection. Now coming to the consolidated that you are seeing at 17%, we have made certain changes in the busy partner payout model, and that is why you are seeing this number to be elevated at 17%. We have also given in the earnings presentation that if you do a like-to-like comparison, this is only 13%. So,
got it.
And given that the first quarter of the financial year for the busy, because most of the people change their accounting softwares during either the last quarter or the first quarter. So first quarter is generally a very high quarter for the busy accounting. And that is why I am still guiding you to be at around 10-12% collection going forward.
Okay, 10-12%. And what about on the subscriber? Subscriber should be around 2,500 odd. Should we work with that number?
Yeah, plus minus 2,000. Yeah, plus minus 2,000.
2,000. All right, got that. Tell us about margins. Marketing expenditure as well did vary in the past quarter. So as a percentage of your mix, what will your marketing spend be at? And also, what is the outlook on margins? Steady state, what should we work with?
So I have been guiding that the margins are currently looking elevated because of the fact that we are not heavily investing in the sales and sales side because the churns are elevated. And as soon as the churn comes under control, we would go whole hog on the sales side. So that is why we have been guiding that the margin on the steady state you should always consider to be around 33% to 35% going forward. However, we have started to do certain marketing spend on the buyer side. We have started some performance marketing, and since we have taken up this activity after 10 years of the last time ever we did any marketing spend, we are taking time to adjust the marketing spend according to the different industries and different geographies, how Google responds and how Facebook responds and how YouTube responds. So I think about 2-3% of the margin we would be spending towards the and that I guided in the investor con call also.
Yep, you had it would be between 2 to 3% of your sales out there. But on the revenue per client in terms of realizations, if you could give us a sense on that as well. While paying subs are increasing, you expect them to increase by 2,000 every quarter. In terms of revenue or realization per client, what's your outlook here?
So revenue realization per client for the last many quarters has been growing at about 10%. In general, if you see a longer term CAGR, it has been growing at 6 to 8%. If the subscriber base starts to grow up quickly, I think that ARPU growth will come down to 6 to 8% only. Currently, since the customer count is not growing, that is why you are seeing the ARPU growth taking the all the heavy lifting, and that is so. If you take this particular quarter on the standalone, 1% came from the customer growth, and 9% came from the ARPU growth.
So 6 to 8% ARPU growth continues. And what about client concentration? Because top 10% of your clients contributed about 40% to your revenues 5 years back, and because of lack of paid subscribers increasing, that numbers increased to 50%. Are you looking to bring it down back to 40%? Because that would be a lot more sustainable, right?
So top 10% customer is quite large number. In our case, almost 22,000 customers. And 22,000 customers, it is not only that the paying subscribers have not grown, and that is why their revenue contribution is growing. See, in a typical marketplace, what happens, top of the pyramid enjoys the largest benefit because they are able to figure out how to do the sales and marketing better using internet. So effectively, we have also introduced category-based pricing and everything, and that all combination put together has slowly increased the ARPU of top 10%, and it will continue to remain at about 50%.
All right, very quickly, sir, when will the churn ratio improve?
So I wish I could tell you a timeline. We continue to work towards that, and the management has been doing good over the last so many decades. I am pretty confident that we should be able to bring it down quickly.
All right, sometime in the second half of this fiscal?
Possibly, yes.
Appreciate you joining in, Mr. Dinesh. Thanks a lot. Wishing you all the best for detailing. Thanks for joining in and detailing the past quarter's numbers. For the time being, slip in a short break, come back, continue to focus on stocks and market action.